So this investment not only gives them euro diversification into the Italian economy in multiple industry, those sort of pillars of the Italian economy, but hand in hand gives them that optionality they're looking for in terms of being a plan B if needed, but also a place that they can enjoy a bit more of that European lifestyle that at times wintry, blizzardy, snow-covered Canada doesn't provide.
Today we're talking about the case study of a high net worth professional Canadian couple who want to spend some more time in Italy. I'm joined by Michael Maxwell, partner from Ariete Capital. Welcome, Michael.
Thank you. It's a pleasure to be here.
So great to talk to you today. Before we get into our scenario here of the Websters, it'd be great to hear a little bit more about how you help clients moving to Italy or with Italian visa options.
Yeah, so we're very much pioneering this space. It's quite new in Italy. While the legislation's been around for a while, no one took advantage of it. But a lot of the good stuff we saw happening in a place like Portugal and Greece a few years ago, Italy's following suit now. And yeah, Italy's Italy. It's just such a wonderful country, such a wonderful brand that naturally there's a lot of interest in it. And what we provide are qualifying investments that give people the investor visa. We don't do legal advice, we don't do immigration or tax advice, but rather run the qualifying investment product.
Great. So just to introduce the client scenario we have to discuss today, David Webster, 58, and Caroline, 56, are semi-retired Canadian medical professionals based in Vancouver. David, a recently retired surgeon, Caroline, a part-time GP. Married for 30 years with 2 adult children in Canadian universities and elderly parents in British Columbia. They have accumulated approximately 12 million euros across pension savings, real estate and diversified share portfolio through decades of disciplined, conservative investing. They want to spend half the year in Europe, ideally Italy, without severing Canadian ties or increasing investment risk. The Italy investor visa via Ariete Capital's €500,000 diversified private investment company route is under consideration. Liquidity, capital preservation and institutional governance are non-negotiable. Residency is the outcome of the sound investment, not its purpose. So Michael, just to kick us off, using this example as a lens, Ariete Capital operates 2 distinct options for the Italian investor visa. Before getting into the Websters specifically, can you explain the difference between the €500,000 and the €250,000 routes? Why does the investment structure matter more than the headline number?
So firstly, I think this is a great example. Okay, so many of our sort of classic examples of clients are semi-retired, retired, in that they want a bit more fun in their retirement to enjoy that European lifestyle. And for so many people, that European lifestyle, the center of it is Italy. It's under the Tuscan sun or something similar. And they are the type of client that typically choose Italy over jurisdictions like Portugal. I find younger families that are doing it more as a legacy passport play often go the Portuguese route, but at 60 plus of age, getting a passport in 10, 12 years time isn't going to change your life. What you want is something pretty much immediate, quick, efficient, that takes you to a place like Italy. And we've launched our business, which is essentially a platform of golden visa qualifying products in Italy. Okay, and we launched with a €500,000 option, which is the more premium option, and a €250,000 innovative startup. The €500,000 option is an audited private investment company that invests into a mixed portfolio of leading Italian corporate bonds and blue chip listed equities. So with that, you get a lot of what you'd expect. Consistency, bit more predictability, liquidity from early on, as well as expected dividends. The €250,000 route is an innovative startup. And of course, when you hear innovation, startup, tech in the same sentence, you're going to think high risk, high reward. Ordinarily, you'd be right. We've structured things slightly differently, which I'll get onto later. But it is a company that specifically qualifies. It's on the government list of approved innovative startups. And it needs to design and develop something of value, IP, that potentially can be sold in the future. So it can't just be a regular startup, it's got to be innovative. The good thing about that is obviously the low entry point, €250,000, which is great value for the best of Italy. The downside is that for the first 5 years, an innovative startup is not allowed to pay out profits, which means don't expect any dividends for 5 years, and there's no liquidity should you change your mind in the first 5 years.
So it's not so much about the risk profile then, is it really? It's about actually the liquidity and the income generation, partly in people deciding between the two. Is that fair to say?
Yeah, that's very fair to say.
And just looking at the €500,000 route, so what are the underlying investments that company would be making?
Yeah, so Dario Montagnesi, my partner and founder of Ariete Capital, and myself are sort of real veterans in this golden visa space. Between us, we've raised well over north of 200 million euros, which for London, New York is, a small drop in a big ocean, but for the likes of Portugal and Italy, those are significant numbers. And obviously, there have been a lot of lessons learned across these sort of 600 investors that we've dealt with together. And typically, golden visa investors, often coming from a place of risk or have enough risk in their portfolios, that they're not looking to shoot the lights out with this investment. It's more about rule number 1, don't lose my golden visa. Rule number 2, don't lose my capital. So it's very much a capital preservation strategy. And we've taken a lot of these lessons in the design of Ariete Capital. And the pillars we've built it on would be on liquidity, diversification, and strong governance. The client essentially becomes a shareholder in our audited private investment company, audited by KPMG.
So they're on a board with you, or
Exactly.
Yeah,
correct. And it's going to be limited to around 7.5–8 million euros. Okay, so it's a small investors club, and that company will then invest into leading Italian corporate bonds, A-listed bonds, as well as blue chip equities. Those sorts of Italian companies that have stood the test of time. They've been in the good times, the bad times, and they're still there today doing good business. They offer stability. They're not going to shoot up and drop dramatically, but slow and steady, edge their way upwards, that over 10-year investment cycles, they tend to come out smiling the other side.
So the board looks at these investment decisions and then approves the deployment of capital into these bonds or other investments.
Correct, and it's a very simple buy and hold strategy. We're not actively sitting on the portfolio trading it daily. You're buying legacy companies with strong track record, buying them and holding them for long term.
And the liquidity is there generated because these are blue chip investments. They have a market value. They can be traded out.
Correct.
So explain how the liquidity works for an investor coming in.
We can't do daily liquidity or monthly liquidity. What we'll do is we'll call a unit holder meeting twice a year. At those meetings, identify who is looking to exit and then create a liquidity event to allow that to occur.
And so the Websters have 12 million euros under management. They're allocating €500,000 to this, roughly 4% of the portfolio. How should they think about this as part of their overall capital strategy? It sounds from your description it's a sound investment, but how should they see it as part of their bigger picture?
Yeah, so you'd imagine they've got a lot of exposure to the S&P, your big 7 tech stocks, your Apples, your Microsofts, etc. This gives them really nice European diversification. As I said, into legacy companies in Italy, companies that they will know and respect, Brunelli, Pirelli, DeLonghi, Ferrari.
Global brands.
Exactly.
Yeah.
So this investment not only gives them Euro diversification into the Italian economy in multiple industry, those sort of pillars of the Italian economy, but hand in hand gives them that optionality they're looking for in terms of being a plan B if needed, but also a place that they can enjoy a bit more of that European lifestyle that at times wintry, blizzardy, snow-covered Canada doesn't provide.
And you partnered with a Swiss private bank to allow clients preferential access on opening accounts. How does this enhance, the proposition for a client such as Websters?
So we wanted to create something that gave people a great offshore golden visa solution together with an offshore banking solution. And very often this is now increasingly going hand in hand, okay? If you look at that sort of modern 7 flag theory of how to de-risk from life, very often your first step is get a second residency, ideally a second passport. Your second step is offshore banking in multiple currencies. And golden visa investors are typically looking for diversification, a currency hedge, risk management, which plays in nicely to the benefits that a Swiss bank could offer.
And proximity as well, isn't it? If you're spending more time in Italy to have your banker in
Correct.
Switzerland gives you access, doesn't it, on the same time zone and lots of convenience.
Correct, and Swiss banking, is very different from the sort of traditional wealth management that Canadians would expect. in that they do put together some really interesting club deals, syndication deals, and other opportunities that ordinarily you wouldn't find through a traditional bank.
Just looking at the eligibility criteria, documentation, timeline. So from the decision, walk us through what the timeline looks like for a client such as this looking at the options.
So end to end, from the day the green light is given to the day you're holding the visa, would be about a 7 to 9 month journey. Okay. The first step in that is getting what's called your nulla osta, which is your pre-approval from the Italian authorities. At that stage, excuse me, it's a done deal. You know you're approved, you know your investment is approved, and then you invest, which is actually quite nice. If I had to compare it to Portugal or Greece, you invest first and then you wait a couple of years to be processed and approved, and while you're waiting, rules can change. In Italy, it's the opposite. You get approved first and then you invest. To get that approval, as you'd expect, the documents that are required would be a clean criminal record, clean source of wealth, source of funds, and a very specific AML banking letter, which is one of the trickier issues in that it's a very specific wording that not all banks are able to issue. But the Italian authorities like to see it as close to their templates as possible. The bank we work with in Switzerland, besides offering our clients a Swiss account with no onboarding fees or minimum deposits, is also happy to issue the letter the way the Italians want to see it. So should it be an issue, we've got a plan B ready to go for clients.
And just in terms of the time commitment, so we know with the Websters they want to spend lots of time in Canada, 6 months per year. What are the conditions for being present in Italy to fulfill the visa?
So investor visa holders don't have a minimum staying requirement in Italy. They need to be there to renew their visa every 3 years. So should the Websters do less than 183 days a year in Italy, while retaining more time in Canada, their sort of point of central interests and family home in Canada, they wouldn't most likely fall into the Italian tax net as well. So they can enjoy the perks of Italian residency for much of the year, while remaining tax residents in Canada, and their residency rights in Canada also remain in place. And
so generally the program's flexible. If people got family obligations elsewhere, there's a lot of opportunity there to build the life you want.
Yeah, so if you look at the Websters, their age, that could have impacts. They might want to be at home at a time of crisis or emergency. They've got grandkids that, if anything like my mom can't get enough of, want to see as much as possible. So they can create this wonderful environment in Italy where grandkids and children can come and stay with them. At the same time, if they want to be there for a special birthday or milestone, off they go back home and they don't have to miss a thing.
And just looking at the Italian property market, I mean, tell us, what do clients like this, where do they end up living? What do they rent or buy? What are some of the mechanics around buying residential property in Italy?
So typically most investor visa clients don't actually move. It's a plan B. But those that do, they go to your likely suspects. Tuscany, your big cities like Rome or Milan, Lucca, for example, as well. Ideally, they should rent for a year or two, get the lay of the land, understand the area, the neighborhoods they like, and not rush that big decision of buying a property. Our headquarters are in Turin, so we're particularly fond of that area and that region, and we're seeing a lot of good growth there. And it's quite nice in that Turin's one of the few cities in the world where you're about an hour from the mountains for skiing and about an hour from the beach, should you want that as well. And we're seeing a big flow of young families to Turin. Now with the new train links to Milan, in Milan in 40 minutes. So families are moving from Milan to Turin looking for better lifestyle, access to more affordable properties, better schools, etc., with the ability to then work professionally in Milan.
And what about on the healthcare side? When clients are more elderly, retired, healthcare is an extremely important thing. How do you discuss this with potential relocators?
So golden visa or investor visa holders in Italy are able to access public facilities like healthcare or even education. And if you had to look at the ratings on the Italian public healthcare system, it scores very highly. Most clients, though, always retain private healthcare in their home jurisdiction or on the home jurisdiction's public service, which is what I'd advise the Websters to do as well.
And from your experience, what separates out clients who make a successful move and thrive in the environment and those who are have a less successful move? What's the differentiator?
I think it's a full commitment and accepting Italy for what it is. A wonderful place that gives you a level of art, history, culture that most places don't. That Italian lifestyle is famous, and you want to maximize that. What you don't want to do is get caught up in local bureaucracy and take missteps, because like a lot of Southern Europe, when things go well, it's great, but if it doesn't, well, getting out of it can be a real hassle. So I would recommend that they engage with the right professionals from day one and get that exit planning and entry planning spot on.
And what's your top piece of advice if you're arranging a video call with the Websters next week? What is it that you'd want to find out, or what is it that you'd want to communicate to them?
I think it's definitely that. I'd say don't rush the decision. While golden visa programs are fickle at the best of times and are changing, usually becoming more expensive, it's not imminent. So start the process. It takes about 3 months to get your Nulla Osta visa, that pre-approval. While you're doing that, make sure you're speaking to the right advisors, get that exit planning spot on, and make sure where you're going in Italy, you've come well advised as well.
And for professional advisors working with clients considering Italian options, what would you recommend to them? How can you work alongside other professionals to get the right result for their clients?
Very often I've seen clients start talking to us saying, oh, we don't need an investor visa, we're doing the elective residency visa, or the opposite. But advisors should really identify, is this a client that's looking to relocate or keep it as an option? How much time will they be spending there? The elective residency visa is great. There's no barrier to entry or investment amount, but it expects a time commitment of 183 days, which then has tax residency implications. So I've seen cases where people start down that route and then learn the hard way that even if they don't do 183 days here in Italy, the visa expects that. So this assumed residency, tax residency, or you lose the visa.
Well, Michael, thank you for talking to me today, and we look forward to sharing this conversation.
Thank you so much. It's always a pleasure working with you.